The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, as I'm known by my Indian name, El Chapo. Anyway, today we are watching a market that kind of drifted up, ran some shorts. Of course, as soon as shorts see other shorts covering, they have to dive in, and they did that. And now we're pretty much in the mid part of the range, up 15 points on the S&P cash. And, of course, the high was, let's call it 1890 on the S&P cash. But we are going to have a market that I will call the Ron Popeil market, because it slices, it dices, it makes julienne fries, and if you're not very careful, it will make a small fortune out of a much larger one. So keep out what's going on. Thanks very much in the den. We had a great webinar last night. I know so many people these days watch it on replay, so I'll be very interested to see how many subscribers we have it. And for those subscribers that did watch it, they wanted to get access to a spreadsheet, and they're working that out. It'll be on your members page. When they let me know that it's up, I will let you know, but it should be up shortly. Volume is still very brisk at 3.2 billion shares as we start the day. So that hasn't changed any. And pretty much in line with what we saw yesterday. There will be a great deal of back and forth in the coming months. But I suspect that we've made at least a temporary or medium-term low. My guess is that people will continue shorting this market. And when the market's ready to go down will be when shorts give up and have given all their money back that they just made off this huge run down. It seems, at least to me, from trading in multiple trading rooms that probably didn't follow the discipline of price and volume as I do, a huge desire to believe that the market really does not change character from time to time and not understand the different parts of the market. This is one where, especially in a counter trend bounce, you have to be rather dedicated, but not committed. And of course, we bring this up from time to time, but Junior Johnson, one of the original NASCAR drivers, was asked whether his driver, and who was it? Trying to remember who it was now. Guy that did the little dance. His brother owns a car team, did own a car team. Anyway, he was asking if his driver was committed to winning for him for some reason. I can't remember why. And he says, well, that goes back to the story of the breakfast. Said that the chicken was dedicated to the breakfast, but the pig was committed. And you don't want to be committed. You may want to be dedicated and see how your profits add up over time. It's not going to be like the bull markets of yesteryear. It will be a slow, painful clod up that will test your patience repeatedly. And, everybody will be sure that the next little tick down is the beginning of the next huge move down. And that's because every time the market moves up, everybody will pile back on. A few days later, the squeeze occurs, it goes higher, and the shorts will be all over it yet again. And it does that until they give up. So to this point, it's kind of like those bears in the park where they get a hold of a human, they eat them. They say, well, we got to put the bear down. They got to taste of human flesh. And you know what happens when a bear gets a taste of human flesh? They just got to go eat more humans. Well, that's kind of the way it is in this market. They'll be pounding this thing at every turn don't even think about being in a weak stock because the wolves are at the door. As always, we like to start this show off, but I forgot something.
The following takes place between 2 p.m. and 3 p.m.
That it's all just a little bit of history repeating.
On this day in 1976, the first commercial passenger takeoff of the Concorde happens, with commercial passengers simultaneously taking flights on January 21st, 18. Is that right? Yeah. 1976. The London flight was headed to Bahrain in the Persian Gulf and Paris to Rio de Janeiro in Senegal, West Africa. Didn't know that. At the cruising speeds, the innovative Concorde flew well over the sound barrier at 1,350 miles an hour, cutting air traffic time by more than half. I was not because, well, one time actually the company I worked for bought a ticket for me on the Concorde because I was delivering something in a suitcase to CNN on the eve of the first Gulf War. And they actually bought two seats. They bought a seat for a big silver metal box and a seat for me. And then, of course, I flew cattle class on the 8-hour back, but flew over there and then jumped down and went out in the Jeep in the middle of the desert and handed all the stuff over to the folks that were doing it. And, of course, came back, like I said. So all that was happening while I was flying back and forth. But apparently everybody had the heads up at CNN that the war was getting started, and it was time to get yet another satellite uplink out into the desert. So I got one ride over the pond in it, and it's kind of interesting. At least the one that I rode in. Apparently, I guess they're different, but both times I flew in the exact same plane, which I think they only had 6 or 8 or something. So probably pretty rare that I only flew in one. But it had no bulkhead in front of the or in back of the pilots. I was literally looking up. I was pretty much up in front, and you could look right up and see the back of the head. There was no bulkhead. There was no nothing. It weighed something more than an ounce, and therefore it wasn't being put on that plane. More like a ride on a roller coaster than anything. Straight up, about an hour or so. Sideways, 2 hours, whatever it is, and then straight down, and you land. And it was kind of interesting to see the nose all move and everything. Like I said, I was up front, could kind of see it. On the way back, same kind of thing. They give you a little piece of cheese and some, or they did on my flight, a little piece of cheese and a little tiny plastic thing of champagne. And by the time I got done eating it, flight was over. Didn't take long at all. It was a great experience. Didn't have to pay for it either time, and that's the way I roll. El cheapskate on the Concorde. We'll be back in a minute. Start talking about market stuff. Ooh, only up 5 points now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And what else can you say? What else we have out here? Okay, not much going on out here. Let's take a look here. Just check. Anyway, you can email me at path@tfnn.com. Give me a call at 877-927-6648. Post a message in the den also. What do we have out here? It's certainly an interesting test of a lot of lows in the markets. The energy on the way back down has not been that exciting. Well, let me put it this way. It has not been exciting to me in that it didn't come in half. Normally, when I looked at my power law vector indicator numbers, I want to see that there's a big disparity in either the upside or downside, so I can either go short or go long. Most of the volumes out there were pretty much similar. What was different was the volumes at these lows. That pretty much insinuates that you're going to get a bounce in most of these into some resistance level. But because the energy down was fairly brisk, you're probably only going to get a bounce in a downtrend, and maybe next time it busts those lows. August 24th, $48.17 on BMO Financial. So you had a big day out there yesterday, just 1.2 million shares. So we're going to get a bounce. Can you get back up to 53? I think you probably could, something like that. And again, this may take 4 to 6 weeks to unravel this next leg in the counter trend rally. The thought is it lasts 2 days and then it's time to short again. That is rarely the case in a bear market. Normally, it gives everybody time to cool down. The markets go up, the shorts quit shorting. And guess what? There's a big air pocket down below because there aren't 500 people waiting to cover every dollar down. But yeah, your mileage may vary as the market does. Let's take a look here. What do we do? We're still off 5 points on the S&P cash. 1865. But still a lot higher than the lows of yesterday. But we'll see these things bounce around for a while. Other stocks of interest, CBI, Chicago Bridge and Iron Company. This one had a big January 30th low of 2015 with 16 million shares. We finally got that one tested. 16 million shares, folks. I'm going to be the counting count here. 1, 6. Ooh, I can't do his accent, though. The counting count. $32.16. 16 million shares. We go back into the Bat Cave to look at yesterday. 3 million shares. Not a whole lot. I do like the energy on this last leg. Really didn't pick up, but again, probably more of a bounce and a downtrend. But a lot of these stocks, you're going to need a lot more volume to go below out lows. And what else do we have here? Core Laboratories. This thing's been making a nice consolidation between about $87 and what is that? 134 back on May 1st. So what did we get yesterday? We finally got the high volume low of January 29th of 2015. Came in with 4.7 million shares at $87.27. Got to $84.50. Spiked it yesterday. And now back up in the trading range, still looking pretty good. But boy, nice test. 1 million shares to 4.7. I don't think a lot of people can confuse how light the volume is in that. A lot of people say they don't get price and volume. I think that they just do not wait until it's so obnoxious that even a blind man could see the change in volume. The Cooper companies, I think these guys make contacts. I don't know why they're called Cooper. Sounds like a tire company. 121.01 on December 4th, 4.9 million shares. And we got into that last few days in the Cooper company with 930,000 shares, 558,000 shares, 50,000 shares. Let's call it that. Nice little pop up here today. Could we get a retest? Anything's possible out here, but we will continue on. What else do we have? I don't even know what that company does. EPI, Wisdom Tree, India Earnings Fund. We've got a little ray of hope out here for India and fans of curry. August 24th, we saw the spike down at $17.76 with 12 million shares yesterday. Just a paltry 7.5 million shares. We went below it. We have to close it back in that trading range. And it looks like we'll be, well, looks like we're close at the moment. But what you have to have, of course, is a solid close back into that trading range. Energy on this one did pull back just a little bit on the way back down to the low. So, you know, I really want to find stuff that has like a 4 on the way up and then a 2 on the way back down. Not only just light volume, but that means that probably the wrong side of the market to be on is short into these things. Now, we did gap down the lighter volume in Hong Kong's index. August 24th saw $17.57 with 16 million shares. We did half that yesterday. Got down to $16.94. Today, 4.5, we'll call it 4.8 million shares. So we've gapped down. We didn't have the energy to do it. We did gap over that low, but volume even less today. Confirmation would be a close back in that trading range above $17.57. So I'll give you a few things out here to look at. We're now just up 3 points on the S&P cash. So what can we say out here? Not too bad. Okay. Frank's International. Yeah, I know Frank. Had him in gym class. I want what Frank is doing today. It was fun. Look up their profile. Provides various engineered tubular services for the oil and gas exploration field. Well, I'm not going to say that I like this business. But the volume says something slightly different. It says August 5th, $13.66, 2.4 million shares. As we've gone back into that low On the 13th, 520,000 shares, 403,000 shares, 520,000 shares. Yesterday, we had 601,000 shares. Today, up a little bit, 139,000 shares. Confirmation would be a close back in and above $13.66. At this point, still ill determined. Anybody else out here? I'm checking my mail. I'm checking. Garmin, interesting move out here. Now, this is one that actually had extensive volume back down to the downside. But what do we have out here? October 15th, $31.32 on Garmin, 9.4 million shares. And we spiked it today, right? Yeah. Oh, no 21st. What's we doing here today? Draw that again. When we come back, we'll have Alex in Atlanta. We'll be talking about Intel.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And hopefully we're back with Alex in Atlanta. Alex apparently burst into flames and wasn't able to hold. Okay, what else do we have? We'll look at some other ones out here. H&E Equipment Services. And that's kind of interesting. This one spiked the lows yesterday. A nice little bounce in it today. Again, this one had a little less volume on this last leg down from November 9th to the low yesterday. So that's pretty good. Also saw the July 28th low, $13.20, 800,000 shares compared to yesterday's 440,000 shares. So why this isn't a screaming buy, if we were looking for things to play in an up market, this is much more appropriate in a bear market than things that had huge volume down. Those are going to be the ones that are always problematic, but we will continue to see how things move along. And what else is going on out here? I guess we have to interrupt this for a Spot announcement. Thank you, Spot. You can't stop them barking once the mailman knocks on the door. That's it. They've got to bark. What else is going on out here? We've got Hoffman Mifflin, Harcourt and Company, opposed to the rest of them. And pretty decent test of the low out here. November 6th, $17.10, 3.2 million shares. Got into it the last couple of days. Yesterday, 1 million shares compared to the 3.2 million shares. That's pretty good. Energy is about the same as the G down. So it would be on my naughty list. And that's it. What else do we have out here? 2.3 million shares on Dorsey Wright International Focus ETF. That's pretty nice. I don't know exactly what those guys do. This one, I wanted to see how it did today. I'd actually had it in my newsletter. I think maybe we talked a little bit about yesterday. But I thought this one would have probably a pretty good run today, and that was Jazz Pharmaceuticals. Let's see. Let's get a quote on that right now. And see, JASZZ. And it's up $1.59 at 130.20. And very interesting setup. But yeah, I think we brought this up yesterday. I liked it. It had a little less energy on the way down. But the thing I really liked was this October 22nd low, 117.26 with 2 million shares, 1 million shares yesterday. So a nice little bounce out there. What else is going on here? Lanet Company. I don't know much about this company either. Looks like it's been halved. It was $60.45 on September 3rd. I think this is an advertising company, if I'm not mistaken. I'll look it up here in a minute. I like this one also for its test of the low. A little higher volume than probably you would think. But certainly November 12th low at $33.13 had 1.3 million shares. And you get into it with 900,000 shares yesterday. A little bounce out of here today. Again, like most of the market, the energy was a little bit more to the downside. Actually, some of these stocks had a lot more volume to the downside than they had to the upside. And that's it. So let's check this company out and look at its profile. Develop, manufactures, packages, markets, and distributes generic versions of branded pharmaceuticals. Well, that's not advertising. It offers a solid oral. Well, I guess that would be liquid oral. And solid oral, extended release, topical, nasal, and oral solution finished dosage forms of drugs. Drugs, friend, drugs. So they're in drugs, a little bounce out of there today. But like I said, a bounce was coming probably early. And, a test a day later does not make a good test for me. I want to see these things actually come back in after maybe 2, 4, 6 weeks, come back and retest these lows. And then if we get lighter volume, that's it. If we retest them here in the next couple of days, that still is probably just a market gas. probably a good description of it out here. So we'll continue on. I've got to kind of keep an eye on a couple of the stocks I have. I guess they're okay. They're still on the right side of the ledger. We're up 10 points in the S&P. Cash at 1870. Volume still strong. 3.5 billion shares on the New York Consolidated tape. Talk about a dog that might be showing some signs of life. Could this be Lumber Liquidators tried to blow through its low yesterday, had no volume? Is this like the king that has no clothes? Kind of. August 6th had a low of $11.62, 5.7 million shares. Been trying to get into that for a while. Yesterday, we got in it, closed back above it on 1.8 million shares today. Just a little higher out here, 621,000 shares. Now, if you come off $115 and you go down to $11, you're going to have a long consolidation. By long, I mean 6 months. Do not expect, you can expect some automatic rallies. Do not expect this thing to just instantly go to $20. But after about 6 months, if they have failed to kill any more people with their wooden flooring, this thing may be interesting. But it's just now giving its first sign of possible life. Other things out here. And I wondered about this one after HP had made it low. Of course, they'd split apart. The August 24th low on Lexmark, the printer manufacturer, $26.86 on that August 24th low. 1.5 million shares. So we spiked it yesterday. We still aren't back in the trading range as far as I'm concerned, or close. You need this to close back above 26.86. But just 770,000 shares yesterday, about half the volume. I do like the way that this did come back with a little less volume. And I'm thinking maybe there's a little bit more of a window now that HP is split up for some of these second-tier printer manufacturers, if they know what they're doing, to kind of wander up, belly up to the bar, and start getting competitive or more competitive. But we shall see. McDermott International, another one that made a fairly significant low yesterday, tested its January 21st low that had 10 million shares, almost. It was 10 cents above it, but it did it with half the volume. You really got to think that you were testing this December 17th low at 221 with 13 million shares. That's why I said, you know, if it comes back and tests something in a week or so, I really don't like it. Normally, you're going to get the retest yet again, and certainly you got that yesterday. A nice bounce back into the trading range. We'll figure out what this company does on the opposite side of the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And McDermott International is a company that is in the engineering space and procurement. There were a couple of things that actually were moving out here I wanted to take a look at before we get out of the day. Of course, little action this morning with Mario Draghi, probably feeling the few of the after effects of that right now. Let's see, come on. There we go. I know you can do it. We had a few earnings, got some earnings after the bell, actually. We'll preview those. FFIV out with earnings last night. It's back into its gap. It actually was doing pretty good after hours. Looks like it's back down. Now, on FFIV, filling its gap, that gap is, if I'm not mistaken right there, 4.5 million shares. So we've got about 3.2 million shares now. So not exciting. Is that? That's the gap right there, right? Yeah, 4.5 million shares. Okay. Just wanted to make sure it was the right one. So come back, fill all of that. Energy was good, but not extensive on this basically one-way trip off the July 31st high back to this low. But at least you're into those gaps. It's got a couple more gaps down below. I think you could make a case, though, that this thing has come back and filled its some gaps on the way down, and now is getting ready to fill some gaps maybe on the way back up. But I don't know. I just think if you don't blow people away on earnings these days, you get blown away. And throwing some cold water on the market, so is the Union Pacific. No one liked it this morning. They got a nice kind of dragonfly-looking doji out here today. It's back a little bit flat, a lot of volume, but it had some gaps in this whole range where it kind of came back and touched these gaps that go back to, what is that, April 17th of 2013, and what is that, May 3rd of 2013. These gaps eventually do get filled. As we said, though, energy on the first leg down off of December 23rd, 2014, had a 6.2. This one had a 7.3. About the same dollar range out here, but a much higher percentage and a much bigger move, but lots of energy. So put this on your naughty list. It is not then. Anybody have anything in the den? I'll check my email real quick. I don't see anything else there. but you can always put it at higher volume on the way down, but lighter volume on the test is autonomy. OTIC, the October 2nd low at $16.50, 520,000 shares, just 260,000 shares yesterday. And it's down a little today, but very light volume. Now this is where you have to look at how the energy came in off the last major high, which was November 13th on it. And this thing actually did not just kind of start. It really accelerated on the way down. And the way I measure energy, this thing had about almost 40% more energy on the way down. GBX. I don't know if that's a request. GBX. Ugly. A little spike off the bottom there. I don't know if there's anything else I'm supposed to be looking at. Go to PAA. Plains All-American Pipelines. What else do we have out here? Nice test yesterday. Let's take a quick look at what's going on out here. To the PAA. 1952 is the last quote. So nice pop back into the trading range for this one. While we were talking about a lot of these energy sector stocks getting tested out here. December 7th, $17.83, 10 million shares. It spiked through it, closed back just above it, I think, or right at it yesterday. And now up a whopping 9%. 9. Too much energy on the way down for me, but you still get some bounces out of these horribly oversold stocks. PIN, P-I-N. I don't know this stock. Let's take a look at it. Power Shares, India Portfolio. Another Indian company. I like the energy on the last leg down here. Did shrink considerably, 2.2 on the first one, 1.8 on the next one. And August 24th, $17.85, 2.3 million shares. Yesterday, a wonderful little 1.1 million shares. So half of it down at the low. It's not back in the trading range, though. You need this thing to close back above 17.85. Maybe we get that tonight as everybody starts trading around and sees that we didn't sell off and starts pulling the market maybe just a little bit the other way. Primerica, PRI is the symbol on this guy. We spiked the low yesterday in it. We go back to the August 24th low on it, $40.36, 1.1 million shares. Yesterday, we spiked it with just a little less than 700,000 shares today, 274,000 shares. Again, energy is about the same on the way up as the ways down. So a lot of these stocks, at best, you would say that they're in a congestion and a consolidation. At worst, they're bouncing to come back out and blow out those lows yet another day. Rice Energy, another one of these energy stocks that had a great little test yesterday that was in my newsletter. December 14th, $8.01, $7.92 yesterday, but 3.4 million compared to 5.6 million. Today, energy pretty good, and volume at least decent in compared to a lot of these. And percentage-wise, a pretty nice pop out here on white as rice energy. I'd made that white part up. Rockwell Medical Company. What else do we have out here? Rockwell Medical. This one tested a couple of days ago. It's coming back up. This one did have lighter energy on a nice consolidation on the way back down. September 28th is the low I'm keying off of. It's $7.09. It did get down to $6.88. It's back into the trade range. Did so on just 640,000 shares. So what, a fourth of the volume of the September 28th low? That's got to tell you a great deal. The other thing I like about these, of course, is, you've got some fairly light volume on this pullback. I don't know if they're got an earnings date coming up. Let's take a quick look. We got so many earnings coming up that a lot of people are gun shy. February 24th on it. I'd watch how this thing trades. I could see a bounce in our downtrend last into March. It certainly did in 2000, and that was a wicked bear market. Beyond that, okay, I'm good on that. I'm good on that. As I said, I've got to kind of keep an eye on my trades out here. We're up 9 points on the S&P cash, 3.6 billion shares. Oh, we're going to a break. We'll be back. We'll be wrapping up the show. You still have plenty of time to call me at 877-927-6648. If you're Alex, you can call back. Of course, if you're anybody, you can call, but Alex would call back. Thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. And in the home stretch, of course, we've got Tom O'Brien to wrap up the rest of the day in the next 2 hours. And I think Andy is on a travel day, so we'll see his smiling face next Tuesday. We're up 10.5 points, 11.5 points on the S&P cash. And again, here's the yin and yang of a bear market, and that is the inevitable belief that everything must be shorted because you've made so much money instead of waiting for the appropriate time to pounce. So anyway, what else do we have going on here? I wanted to look at a few other ones. Now, everybody says, okay, how do we know this is a bear market? Well, certainly we had the kind of volume that you have in ETFs in a bear market. There are plenty of stocks that basically did not have it. If you go back and look at the volume in the NASDAQ 100, you compare it with the actual volumes in the ETFs, you'll see that there is a big disparity out there. Most of the high-frequency traders are more than happy to pounce on these ETFs and move them around a great deal, leaving the actual underlying stocks with probably a better picture of what's going on, in my opinion. And that is that we're going to have these midterm bounces. Everybody would look at these lows and say, these are high-volume lows. We had 50% more volume in the SSO yesterday than the August 24th low. Well, I can tell you that. We had volume yesterday. It's just that there are enough stocks out there that didn't have volume that have already fallen 50, 70, 80, 90%, as we've seen today, like lumber liquidators, and they didn't have any. One of the best stories, of course, that introduced the crime drama to the world was Sherlock Holmes. And one of his most famous cases was that where the dog didn't bark. So the assumption had to be made that the dog knew the perpetrator because the dog barks at anybody he didn't know. So anyway, when we know that the dog basically barked in the ETFs but didn't bark somewhere else, then we know that we've got some kind of perversion of the market. And that preversion, I like that. It takes me back to that movie. Is that How to Love the Bomb? Dr. Strangelove. Anyway, in the preversion of the markets, you're probably going to get a bounce, and everybody's going to short it. And guess what? You're just going to sit there and short it, short it, short it. Problem is that normally these markets do not like to turn again until the shorts have given back all the ill-gotten gains they made on the way down and have become perma bears. And it kind of starts a feedback loop of that forever. Some of these stocks, some of them are still under their lows. That's not a good sign. Some of we're looking at Stag Industries here, probably the last one. So these things I give them 3 days. If they don't actually pop back into the trading range, even on light volume 3 days, you're probably looking lower. September 1st on this one, we saw 1666, 1.2 million shares last 2 days, 760,000 shares yesterday, 342,000 shares today. What does that tell me? This has one more day to pop back in and above 1666. If not, you're probably going to actually see more selling. Even if you had a lighter energy on the way down, even if you had a lighter test on the way down, you normally get about 3 days. And if you're not out of there, you're still in trouble. So we'll look at our market now up 17 points on the S&P cash. As I said to somebody else, this is a market that if you're going to be long, you are going to have to sit on your hands or chop to bits. We'll see you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to. And cover your shorts when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.